Good day and welcome to the Krystal Integrated Service Limited Q2 and H1 FY26 earnings call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. The conference is to now hand over to the conference to Mr. Sanjay Dige, CEO and whole-time director of the company, for opening remarks. Over to you, sir.
Thank you. Good afternoon, everyone. I would like to wish all of you a very warm welcome to the Krystal Integrated Services Limited earnings conference call for the second quarter and half year ended 30th September 2025. I would like to begin by expressing my gratitude to you all for taking time to join us today. It is always a pleasure to have this conversation with you. We also have on the call my colleague, Mr. Barun Dey, who is our Chief Financial Officer, and the Adfactors team, our investor relations people. I hope you have had a chance to review our results and the detailed presentation shared earlier. I will take you through the key highlights of our performance, business developments, and outlook for the coming quarters. Let's begin by reviewing our performance. The second quarter was operationally very steady, though the reported numbers were relatively lower than Q1 FY26 and Q2 FY25. The government business, as has always been, is very, very interesting and shows a huge amount of potential. The government spend has increased, and we are very, very excited that we will get the opportunity to participate in all this government expenditure on infrastructure, education, health, and the sectors that we generally operate in. Having said that, the bidding process in the last quarter, due to huge documentation, has been a little slow, which has resulted in actually a little delay in acquiring the work order and deploying the services. So many of these tenders, they involve large-scale and multi-locational contract documentation and the methodologies of their approvals. So I think it is just a matter of time that we will have all our work orders in place and start deploying our service and commence billing. But overall, it seems to be very, very interesting with the way the government is moving forward in the facilities management domain. Additionally, because there are so many tenders which keep on coming, we consciously chose to bid only for projects which offer healthy margins. And therefore, there were a couple of tenders that we chose intentionally not to bid. So this strategic call, I'm sure, is going to strengthen our margins in the coming quarters and the years to come, and have a good balance, as we always have, between top-line growth and healthy margins. Despite these short-term delays, our underlying momentum remains very, very strong, particularly in the corporate segment, where we continue to see robust traction. To talk about our corporate business momentum, I am extremely happy to share that our corporate business has delivered an encouraging performance. The revenue from this segment grew by almost 53% year-on-year in the H1 FY26. We added 92 new corporate customers during the H1 FY26, building on the 114 clients added in the FY25 totally. The quality of these clients is significantly better than what we acquired in the earlier years. Also, our penetration into various segments has been way better. So I will be very, very happy to tell you that now we are across length and breadth of various sectors, whether it is pharma, manufacturing, logistics, warehouse, IT, ITS, so on and so forth. And we have a very, very strong and recurring revenue potential. And also, the corporate sector has enhanced its margin offerings because they have realized the importance of our services to maintain their assets or to keep their infrastructure up and running. So we are very, very optimistic that our margin profile in the corporate business is on the upswing. Our focus over the last few quarters, especially through FY25 and 26, has been to deepen penetration in various services also that we offer. So there are about a dozen services that we are offering, and the result clearly reflects in that strategy taking shape. We are working with several high-quality, high-paying customers who value our compliance, service quality, and integrated solutions, all areas where Krystal has built a strong differentiation. So talking about public sector and government contracts, on the public sector front, Krystal continues to consolidate its leadership position with a series of important contract wins during the quarter and the first half. Our rupees 157 crore worth of mandates from the Directorate of Education, Delhi, including sanitation and security manpower services. Just to give you a quick idea, the 157 crore win is really, really good. But I am also very happy to convey that in the earlier tenures that we serviced this tender, it was only sanitization services. We are very proud to have added our security manpower services into this tender. It not only is a very good contribution to our revenue here, but paves way for our pre-qualifications in bidding for more and more only security manpower and man-guarding related contracts, which are on the verge of being floated in the quarters coming. Secondly, our rupees 168 crore sanitation service contract from the Directorate of Medical Education, Andhra Pradesh, covering leading hospitals and medical institutions. This contracts also consolidates our position in the overall healthcare, where we've been proud operator of more than 60,000 hospital beds at one point of time. Rupees 370 crore social welfare projects from the Commissionerate of Social Welfare, Pune, spanning hostels, residential schools, welfare homes and training institutes across Maharashtra. Rupees 65 crore management contract from MSEDCL for O&M of substations across the states. Earlier I have stated our intention to build O&M as an independent vertical. This is our commitment. This just shows our commitment to creation of this vertical, and that too with this contract of MSEDCL, we now get qualified to bid for such contracts across India in various electricity boards. This is a very, very important contract for us, and gives us a huge headway in our O&M in the energy sector. 31.5 crore manpower service order of Maha Mumbai Metro across multiple metro lines. We specialize now in managing of metro services, and this continues our foray into the metro sector. Last but not the least, 20.3 crore of facility management contract for the new terminal at Patna Airport. You all already know our various airports that we are managing, and this consolidates our position not only with the private players like Adani and GMR, but also in the Airport Authority of India, the government-owned terminals. Together, these wins reflect Krystal's strong execution capabilities, operational reliability, and reputation as a trusted partner for critical public infrastructure management. The wins also establishes our the focus on our strategy of bidding for good quality tenders, focus on our strategy for bidding for profitable tenders, and focus on the strategy where the bidding process will not dictate only a top line, but give a big amount of stress on healthy margins in the quarters and years to come. Despite subdued top line in Q2FY26, margins have been maintained. As I say, this is the outcome of our disciplined bidding, efficient manpower allocation, and increasing mix of higher margin corporate contracts. That said, our people costs have risen a bit, driven by business expansion, the creation of new captive teams for our other subsidiaries, especially the wastewater management, and the establishment of our footprint in terms of new offices as a part of our pan-India penetration strategy. We have acquired extremely well-talented team across the country, across our business development, our service delivery, our back-end operations, and this has reflected in our growth in terms of corporate business as well. We view this as an investment in future scalability and operational resilience. Once this, the talent and the team, which is very well experienced and from the industry, starts performing, I will be able to come in front of you with really a set of numbers that we will all be happy to listen to. Today, our total branches stand at 33 as compared to 26 as on FY25. Talking about our emerging businesses, water, waste, and O&M, we are actively exploring multiple opportunities in the water business, both in operations and maintenance and integrated management. In O&M front, we have recently acquired one of the biggest warehousing chains in southern India, and where we are offering O&M services in the corporate sector as well. In the waste, in the wastewater, we are also participating in various river cleaning projects, which are more than 15 years of tenure, which will give us a good O&M order book as well as good project execution opportunities. Subsidiaries and new verticals, we are also evaluating opportunities as in ports and solar EPC, which are currently at the discussion stage. These were the subsidiaries which we have already formed, and I am sure all of you are aware of them. These align with our strategy to diversify our service offerings within the infrastructure-linked facility management. To summarize, our Q2 we had a good Q2, though the timing in allotment of orders and finalization of tenders were a bit delayed, but our presence there is very strong, and our strategy to bid, as I have been talking to you, is very, very robust. Order inflows remain healthy with a solid pipeline under evaluation. The corporate business continues to scale profitability, margins are stable, and our pan-India presence is expanding steadily and rapidly. We expect the deferred tenders to translate into executable orders, as I explained, very soon in the next couple of quarters, which should reflect positively in our performance in the second half of FY26. I thank you very much for giving me a patient ear. Thank you for your continued trust and support in Krystal Integrated Services Limited. Gives us a lot of strength. I now hand over the call to Mr. Barunde, my colleague, for his financial highlights.
Good afternoon. This is second quarter Q2 FY26. We reported 283.40 CR in revenue during Q2 FY26, reflecting 6.5% year-on-year growth. The moderate growth was due to delay in tender finalization across several key departments in government segments. Many of these projects are large and multi-locational contracts, and the documentation and the approval processes have taken longer than expected. Our EBITDA, excluding the other income for the quarter, stood 17.91 CR, up 5.3% year-on-year. Despite moderate growth in operating profit, EBITDA margin declined slightly by 7 basis points to 6.32%, primarily due to higher employee and administrative costs associated with business expansion and establishment of new offices as a part of our pan-India penetration strategy. The PAT margin stood at 4.65%, lower by 102 basis points year-on-year. This decline is due to conservative approach to taxation, slight increase in finance cost and depreciation. Earning per share for the quarter is rupees 9.42. Now coming to our half-yearly H1 FY26 numbers. For H1 FY26, our total revenue stood at 606.48 crore, registering 15.9% year-on-year growth. The growth was led by strong execution across segments and new orders win from both government and private sector contracts. Our EBITDA, excluding the other income from H1 FY26, stood at 39.26 crore, up by 18% year-on-year, reflecting improved operating leverage and efficient cost control measures. The EBITDA margin expanded by 11 basis points to 6.47% compared to the same period last year, demonstrating disciplined expense management and gradual operating efficiency improvement. Our PAT for the half year was 29.51 crore compared to 30.30 crore H1 FY25, marking a 2.6% decline year-on-year. The PAT margin stood at 4.87%, contracting by 92 basis points, mainly due to slight increase in finance and depreciation expenses and conservative approach to taxation. Earning per share for the period is 21.19. So that is all from our side. We can now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Rehan Syed from Trinitra Asset Managers. Please go ahead.
Hello, good afternoon to the team, and thank you for giving me the opportunity. Sir, I have a couple of questions. First, on the working capital side. So could you please help me understand regarding how has the working capital cycle trended this quarter, particularly on the receivable side, given the increasing government exposure? So has the collection efficiency improved further, or what's the scenario over there?
Rehan, thank you for asking the question, though your voice is a little echoing, but I think I've got what you tried to say. These numbers actually have improved because there has been substantial amount of collection which has already come in the last month. So therefore, going forward, the situation, what is reported is not going to be there. So our working capital will come back on track.
So you are saying like going forward, our receivables will go down, right?
Yeah.
Okay. And just wanted to understand regarding the plans to revisit pricing or pass-through mechanism in contracts, especially giving inflationary pressure in consumables and utility side. So is there any plan to revisit your pricing or increasing price to the customer side?
No. Can you just repeat it? Your voice is echoing so much, I'm not able to grasp exactly.
Yeah.
What is the last? You talked about pricing, right?
Yeah, like I am saying, increasing prices. Could you, like, is there any plan to shift the prices towards the customer side?
No. Can you again repeat?
Yeah, I am saying, like, is there any plans to shift pricing on the for cost pass-through mechanism in contrast to the consumer side? I'm asking consumable and utility.
So now, based on whatever that I am understanding, in various services that we are offering, the the calculation methodology is very different. Very different. In IFMS, it is mostly bundled cost, which I gather that is what you've been saying, whether it is a bundling of man, machine, material, everything is bundled. So that methodology of pricing is going to remain the same. There are two variations there in the pricing. One is based on head count and the other is based on the square foot. So we keep on fluctuating between these two zones based on how the customer requires. But that is going to be continuing the way it is.
Okay. And last one bookkeeping question on the order book side. So, like, could you please share the current order book size and growth visibility for the next 2 quarters? Specifically, are you seeing any higher traction from private sector clients compared to government institutions?
That's a very good question, and yes, I am seeing a growth in both the sectors, not being biased to only one sector. The government sector itself is growing because there is a lot of infrastructure spending coming in, government obviously coming up with very good tenders. Second thing, there is a big push with the corporate side also, and in various sectors, whether it is like the manufacturing is really growing, so the warehousing is growing, the cold storage new facilities are coming. So we are seeing growth in both the sectors. And to give you a little idea on the order book, we are sitting on an order book position of more than 2,600 crores. And it has a great bifurcation. Almost more than 1,600 crores is government and more than 960 crores is corporate. So we are very, very both the sectors. And add to it the sectors that are new that we are developing. You know, if you actually see the way that we are progressing, we are going to have a very good years going forward.
Okay. Like, so any growth guidance you have to put here? Any specific?
No, I didn't get you.
Like I'm saying, any growth guidance numbers you have to put here?
Growth guidance is with even the result that we have, even the performance that we have given in this Q2 of 2026. We are one of the best performers in the sector. So we will keep on performing better. That is the endeavor, to keep on beating ourselves and keep on performing better. That is the guidance that I can give, because we would love to outperform ourselves all the time.
Yeah, okay, sir. Thank you. Yeah, I'll join back in the question.
The next question comes from the line of Rushil from Pink Wealth. Please go ahead.
Hello.
Hello.
Yeah. Good afternoon, sir.
Yeah, good afternoon.
Yeah, sir, my question is related to bookkeeping. This quarter, we have seen that, cost of material consumed has increased from 18 crore to 48 crore. And we have a moderate revenue growth. So can you just explain us?
Hello.
Yes, sir.
Yeah, in our service profile, we also have our the ITITS business, which is the smart city business that we have been doing. So when this business is rolled out, there is a certain capex which is done in this vertical first, and then the billing happens. So therefore, you are seeing a little spurge in the capex.
20 CR billing is.
And sir, like we have seen that, in this quarter, there is a reduction in employee benefit expense from year on year and as well as quarter on quarter. So is it something like that we have seen a high attrition rate and that is why, we are increasing our tax provision as we might get less 80JJ benefit? Is it something like that?
No, this is a very good question, Rishi, but this is also because of our the DME, we earlier used to do 6 zones and therefore we had over 16,800 plus people. Now that in the re-tendered process where we have strategically bid for only one zone and the profitable zone, the manpower headcount has come down, and that is the difference that you are seeing.
And sir, all our contracts, basically if I see IFM or security solutions, are fixed contracts or let's say there is inflation also, inflation-linked contracts also, or there are fixed contracts or variable contracts?
So these are variable contracts where we get a benefit of any fluctuation or any inflation that takes place.
Okay, so all IFM and all catering, IFM and security solution business?
All contracts.
Okay. And sir, just wanted to understand that, we have a robust order book of 2,600 crore plus. So can you just tell us that when this order will get executed fully? Is there are those order execution in 6 months, 12 months? How are those orders execution?
The beauty of our business is a long pipeline. So when we get one order, the upside is that we have an order book position for 3 years minimum, because most of the contracts are 3 years plus 1 year. So this 2006-year order book is for the period of 3 years, and this process is a continuous process. So while we are doing this call, my bidding team is bidding for some tender, or we are winning some tender. So it is every day we are moving ahead. So every day, every time we acquire a tender or any contract, it is for the next 3 years from the date that we acquire. I mean, that is the beauty of this business. So answering your question in a nutshell, the 2,600 plus is order book position for the next 3 years.
Okay. And sir, since you have...
Rishi,
yeah?
We may please request you to join back the queue for your follow-ups.
Okay, this is the last question. Is it fine? Continue on.
Yeah, ask me.
Thank you.
Ask me.
And sir, are we since you said that, we have a good order book for the next 3 years, but do we face any, execution challenge in revenue, to convert it into billing? Are we facing anything like that?
Not at all. The only challenge that we may face, which we faced in this quarter, is a certain delay in documentation. That is the only challenge that we see. So that delays. So, for example, if you are in the last week of the quarter ending and the documentation spills over the next quarter, my reporting actually spills over the next quarter all of a sudden, and my numbers go here and there. So operationally, we have a 25 years of fantastic experience. We have one of the country's best service delivery team. So we don't see any challenges because we are one of the most experienced people here in rolling out large contracts and multi-location contracts. The only challenge that we see is the documentation, signing up of agreements, and the secretarial part of it. That is all.
Okay, sir. Thank you, sir, for answering the question.
Well,
thank you. In order to ensure management can address questions from all the participants are requested to limit their questions to 2 questions per participant. And the next question comes from the line of Urmesh Shah from Moneyvisors. Please go ahead.
Yeah. Am I audible?
Yeah.
So my first question is on the contract that we secured from the effluent treatment plant at Chennai. So